Great. So first of all, I would want to know whether you are able to hear me very well from wherever you guys are. Are you able to hear me? And if possible, as you respond to that, and ensure to tell us where you are getting this signal from. Where are you signing up for this signal from? Do we have some students who are reaching out to us from Eldoret? I can see Kijabe, right? Kericho, Nanyuki, Samoi Nanyuki. You know, I'm a product of Nanyuki High School. I was in Nanyuki High School in the late Mombasa, Kendu Bay. Wow, great, 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 great. Turukana County. Thank you very much. Nairobi, Joshua Mahigi is Nairobi here. Perhaps he could be in the same town with me. Kisumu, Nanyuki town. So Nanyuki town, we used to eat very good nyama choma in Congo. Is it Congo? Congo, something, Maitoma, something like Katet. Ruaraka. Thank you very much. Great, great. Machakos, Makueni County. Very good. I'm happy. Durban, South Africa, Mike. Great, great. Kigali, Rwanda. This for sure is an East African, right? Meeting. Peter from Ruaraka, thank you very much. So let's get started. Ladies and gentlemen, there is what we call a balanced scorecard. Is there anybody here who has ever heard of this famous model called balanced scorecard of measuring performance of an entity? Measuring performance of an entity. BSC, balanced scorecard. Famous balanced scorecard. Gilbert and Sama, yes. Any other student who has ever, not student, but person who has ever heard of a balanced scorecard? Balanced scorecard. Yes. Now, the balanced scorecard, of course, enables us to look at our performance holistically, right? In a balanced way, where we don't only look at just money as the only thing that is driving our performance. No. Under the balanced scorecard, we have got how many perspectives? 4 perspectives. The first perspective is financial. The second perspective is customer. The third perspective is processes perspective. The last perspective is learning and innovation. So I'm repeating again, 4 perspectives. You must ensure that your business is doing very well financially. The profit metrics must be growing, right? You must ensure, number 2 perspective, you must ensure that your customer base, your customers are growing by the day. Number 3, processes, you must ensure that they are automated. Number 4, ensure that your employees are learning. They're engaging in what we call continuous professional development, CPD, continuous professional development. It's only employees who are aggressively learning throughout who will be able to give you a competitive advantage, in the sense that your company will be known in terms of what being innovative. So 4 perspectives, I'm repeating again. I keep on repeating things. Sorry, I'm a bad teacher. I keep on repeating things. I'm a bad teacher. Number 1, financial perspective. Number 2, customer perspective. Number 3, we have the processes perspective. Number 4, we have what we are calling learning and innovation. I did not come to teach you here today. What I came to teach you here today is called the concept of financial health check of any business, And I would really request that you guys put forth on your tables. You must be having a pen and a paper. On your tables there, you must be having a pen and a paper. You must be having a pen Tell me whether you have gotten hold of a pen and a paper. A pen and a paper. You guys have a pen and a paper. You guys have a pen and a paper with you. Unfortunately, we have hit 100 participants and my Zoom can only hold 100. My Zoom can only hold 100. Do we have a pen and a paper? Do we have a pen and a paper? Do we have a pen and a paper? Pen and a paper, pen and a paper. Great. Now, in the financial health check, I'm going to look at how sound your organization is in terms of having planning and budgeting systems. Do you have budgets? In terms of the basic accounting systems, in terms of how you are able to do your financial reporting, in terms of your internal controls, in terms of number 5, working capital management. Ladies and gentlemen, remember in business, cash is king. It doesn't matter how profitable you are. You could be so profitable, but at the end of the day, if you do not have cash, you will not be able to make any moves ahead. If you're joking with your staff, if you're a company, for example, that pays their salaries here beyond the first, second there, you're really messing up big time, right? Then at the end of the day, we shall be interpreting your score, and then we have the additional resources, etc., like that. Okay, great. So here we are. Now, so what can the health check do? This health check, what can it do? This financial health check can help you assess the health of your organization's financial management. It is designed as a self-assessment tool. So that you can identify the areas where you need to improve. The health check is a set of statements of good practice. They cover all the key areas of an organization's financial management. For each statement, you need to consider how well your own organization is in line with good practice. By the end of the health check, you'll be able to tell if the financial management in your organization is healthy or sick, and whether you need to call a doctor. And of course, if you are sick, the very best doctor you need to call is Aura, Joshua here, and I'll be able to ensure that we resuscitate that company of yours. So you may like to run the health check again after a year or 2 to assess and monitor your progress, right? So first of all, I would want to know whether we are together. Are we together? I'm not seeing your responses. Patricia Mudewi, yes. Thank you very much. So it's all about being able to diagnose problems in our organizations. And I made a bad assumption that each one of you knows me. Is there anybody who does not know this man? Is there anybody who has never met this Mwalimu who is talking here today, really? Any accountant who does not know Aura? I know there are some businessmen here. Then I'll be able to introduce myself. But before then, what can this health check not do? What it can do and what it cannot do. Every organization is different, and the financial management systems must reflect this. A one-size-fits-all approach can never work, but the key aspects of good practice are the same for most organizations most of the time. The health check focuses on those key aspects. They are the foundation stones of good practice. This financial health check only provides a general indication of the health of the organization's financial management. It is not an exhaustive list of all aspects of financial management. It is not an audit, and it does not describe a standard set of procedures which are relevant in every situation. I told you we are taking less than 30 minutes. Trust you me, by 10:45 we'll be out of this place. Now, how to use this health check, which I'll be sharing with you. I'll be able to share this with you on WhatsApp so that you can also be able to assess your company. The health check can be run by any member of staff or a director. You do not need a specialist financial skills. You don't need specialist financial skills to complete it. It includes explanations of each section and a glossary of the financial terms used. At the end, you'll be able to see the glossary of terms. The most useful way to use this tool is to complete it in a 2 to 3 hour workshop meeting. Of course, for us, it will take very few minutes because I'll rush through it. But when I go to a company, I've done this for very many companies. When I go to a company, it normally takes me like 2 and 3 hours for me to be able to say, hey, this company is sick, and this is how you should be able to really get out of your sickness. This is a medicine that you need. With the input from the CEO has to really be there, or managing director, senior managers, and a selection of budget holders, finance staff, and field staff. Ideally, I talk to a team of about 5 to 7 people in an organization. Taking each statement of best practice in turn, discuss whether it is true or is in place or happens in your organization. Agree on a score based on what actually happens, not what is supposed to happen or what is documented in your finance manual. The scores available are 5, 4, 1, and 0. We don't have 2 and 3. It's for purpose of I'll be able to explain later why we don't have 2 and 3. So the scores available are either 4, 5, 4, 1, or 0. So listen, and this is the most important part that you need to appreciate. Response, always true. True 100% of the time. Our practice is totally in accordance with the statement. So shall be giving a 5. If you are able to follow the best practice principle statement that I'll be reading for you 100%. For example, if it's budget and you have budget, then the score will be 5. True, but not all the time. It's close to 80%. If that is the case, then you score what here? You give a score of 4. Then sometimes true. True between 12 to 80%. Close to 0, but not that poor. You shall be giving a score of 1. True, less than 20% of the time. This basically means that that best practice is not in place or does not happen at all. Clearly, a degree of judgment is required to decide between 4 and 1. And it's not an exact science. If you cannot give yourselves a clear-cut 5 or 0, you need to decide which one you are closer to. Are you closer to 4 or to 1? Let's see. Let's see. And this is the best part. Often, the real value in this exercise is not the score itself, so much as the conversations and the details of issues discussed. Make good notes and keep a list of action points as they come up. Ring the score for each statement. Add up the total for each section and transfer it to the final score page to get a total. Then interpret the scores using the guidance given. We start with the planning and budgeting. For those of you that I'm teaching leadership and management in the advanced level of CPA, you know that controlling function is a major function in any organization. Any manager, any director who is not in control of their operations as an institution, then automatically that company is doomed to fail. And one of the ways of ensuring that you shall be in control of your financial operations and any other metric in the organization is to ensure that you are able to plan ahead. When you are planning, it will be very important to get inputs from other employees. Planning is never a director's thing only. It is basically the bottom up. So when we talk of bottom up, I'm so sure some of you are thinking of politics, not that. So it's bottom up, try to involve everyone in the plans of the company, because really every person, especially if you are a good company, a good company that is paying good packets here, at the end of the day, each stakeholder wants this organization to succeed. So involve them. So you have this plan. If it's RCM online college, for example, you've got this activity, right? We have got an activity where I would want to take all my lecturers, in this case here, to Tanzania soon, right? So you have all those activities planned so nicely. And then at the end of the day, if they are financial in nature, you need to bring those activities, you quantify them. So when you quantify them out of your plans, then you come up with what we call a budget. Because basically a budget, in simple terms, what is a budget? It's a financial plan. So the word finance says, so you have your plan being, in this case here, quantified, where we are putting the finances there, and the plan, this financial plan, the budget must be time bound. A plan, a budget for the year 2022. So once I have this budget, for example, I've said in this budget that communications, for my people to communicate very well, I'll be able to give an airtime of 500,000 shillings a whole year. It's a big company. Now, you know, in terms of monitoring and controlling, I'll be able to track down, like at the end of month number 1, I expect in this case here, for example, communications, telephones, making calls, etc., should have cost the company 50,000 on average. So if it takes us more, maybe 67, I need to question. I mean, where are we heading? We're going to have an overrun. So when I try in this case here to connect my budget with my actuals through what we call variances, then ladies and gentlemen, I'll be saying at the end of the day that I'm in control, and therefore the company will be said to be what here? Financially healthy. Now let us start scoring. Let's start scoring. Let's start scoring. Let's start scoring. Let's start scoring. So this scoring is very, very important. And again, remember in planning and budgeting, what have we said? You must involve staff. So we start with this 1.1. Remember, these are the scores. So don't write the statement, because I'll be sharing with you this. Don't write the statement. You'll only be writing the score. 1.1, the first best practice question statement. Budgets are prepared in good time for all the costs of running my organization. So if you believe that this statement of best practice is very true in your company, you say it's 5. If, for example, your budgets are brought in very late, for example, like in February, or if you don't have budgets at all, you simply put 0. If you have budgets, ladies and gentlemen, that you believe, okay, they put in a nice time, but not always, you score 4. So you know the score to pick, because I explained back to you this. So if you're a company that doesn't have any budgets whatsoever, put a 0. If you believe in this statement of best practice that it happens in your organization, put a 5. So have we been able to place a score for ourselves there, ladies and gentlemen? So is there somebody who has written there 1.1, for example, 4? 1.1, for example, 0. This is something which is very important, because if you are running a company without a budget, please be prepared. We are going to bury your company very soon. We shall be burying your company very soon. So have we been able to give that score? They're not talking to me. Am I using a very harsh language, or they're not talking to me? Have you been able to put a score for 1.1 so that I can go to 1.2? Yvonne says yes. Patricia says, thank you very much. Now we are together. We go to the second one. Now I'll move very fast. Both finance and non-finance staff are involved in setting budgets. We need the non-finance staff to really make our budgets work. The production team has to be there. If in your company, it is only the accountants who prepare budgets, please put a 0, because best practice wants us to involve non-finance staff. So if this is a statement of best practice, if it is there, please put a 5. So can I go to 1.3? Can I go to 1.3? Please talk to me very fast. Can I go to 1.3? Now I'll move very fast. 1.3, department budgets are based on the costs of activities that we planned. Are we that organization that basically wakes up in the morning and is saying, let's adopt the budget of last year without interrogating what kind of activities are we going to have our departments engaging in? So please put a 5 or a 0, put a score there, put a score there. And please don't be ashamed to put 00 throughout. I've done this for very many companies, and even these big companies will be surprised. Some of them are putting 10, 10. And then when we really get into the second assessment, you get themselves, in this case, you're putting in place techniques which really now come to work later on. So don't be afraid to put 00. Okay, we go to 1.4 now. Budget worksheets include explanatory notes and clear calculations. If you're using Excel, if you have your budget, or rather even if it's just a bound book, you have a very clear explanatory notes, like how do you arrive at communications being able to take up to 500,000. Your budget, they have explanatory notes and the clear calculations. Please put a 5, a 4, a 1, or remember, you are appraising your own company. You are appraising your own company. Ladies and gentlemen, remember, overheads are a killer. These common expenses like fixed overheads like rent, they're a killer. And I know there are companies in this case here which will do budgets without including these overheads. And for overheads, we simply want a separate budget. Just like, for example, for those of you that I taught management accounting a long time ago, like you have a materials budget, we must have an overhead budget. Titus Opio, thank you very much, but please don't put your scores here. This is supposed to be a big secret, Titus Opio. Don't put your scores. Don't put your scores here where we are able to see. I asked you people to provide a pen and a paper. A pen and a paper. Titus, you don't want to really know the company you're working for. Please don't do that again. Don't do that again. It's a secret. It's a secret. It's a secret. So, ladies and gentlemen, as a senior manager, I would really be interested in this overheads budget. So that there is a statement of best practice here that a separate budget is prepared for administration costs. A separate budget of overhead exists. If it exists, say 5. If it doesn't, say 0. 1.6, organizational budgets are approved by board of directors. After this budget has been done by your team of budgets, are these budgets, ladies and gentlemen, ever approved by board of directors? They sit down in their minutes and the document that their budgets have been voted and are passed by them. If that is the case, then put a 5. If that is not the case, then put a 4, a 0. 1.7, a named individual who is a budget holder. Like in Kenya, we have a budget director, is responsible for implementing and managing each budget. So do you have budget holders in your organization? Do you have somebody, in this case, of course, it doesn't have to be called the name budget holder. Do you have people who are responsible of executing the budget? If you do, put a 5. If you don't, put a 0. Right? There is this thing, ladies and gentlemen, that many people have never known. Remember, in accounting, we have our accounting chart. We have our accounting charts, financial reporting charts, each with a code. For big companies, normally the budget codes must match the accounting codes for purpose of monitoring and tracking. So I'm asking, or rather not even asking, there is a statement of best practice here that budget codes match accounting codes. If you're aware of this, if it exists in your organization, please put a 5. If it doesn't, please put a 0. Great. We go to the next one, which is 1.9. All planned operational costs are adequately funded. Operational costs, we don't want to get into a situation where we are not able to operate. So if it's RCM Online College, we have a subsidiary called RCM Publishers. We must ensure that books are being produced without hiccups. So if we have in our budget production of books as an operational activity, then we must fund this activity fully. So all planned operational costs are adequately funded. If they're funded, put a 5. If they're not funded, put a 0. So like Kenya, you will come up with a very good budget. You will hear of very many budget deficits. That's wrong. Very good. And then now we have the last one, the concept of cash flow. I told you cash is the key. A cash flow forecast is prepared every month. If you normally prepare a cash flow forecast every month, please put a 5. If you do not do that, please put a 0. And then now give me the total score for planning and budgeting. So please add up your scores. Add up your scores and then give us figures now on the charts. Add up your scores and then you give us figures on the charts. Total figure on the charts. Add your scores and then you give us the total figure in the charts. Bahati says 34. Michael says, thank you very much for your honesty. Michael says 0. Yusuf 0, okay. Yeah, Beatrice 5, Titus of Pio 30. Robert Doty 43. Lawrence 0. Hamisi 32. Samuel Omondi 10. Bash 35. Peter Wangeshi 12. 35. I can see Felicitas there. Great. Now, if you allow me, Rotich Ben 40. Gilbert 30. Thank you very much. So please allow me to move the second one because of time. Thank you very much. I'll be able to address those figures there, each of them one at a time. So we go now to the second component, basic accounting systems. I'll just read through very fast and then we get to see best practices. That every financial transaction should be backed up by a supporting document. Every financial transaction. We can never have a financial transaction that doesn't have a supporting document, e.g. a receipt, invoice, or signed sheet, e.g. for these many travel reimbursements. This is the evidence that a specific transaction has taken place. Every transaction involving paying out or receiving money should be written down in a cash book. Even if it's an online cash book, it has to be written down. It can be kept in a physical cash book or a petty cash book or just an Excel spreadsheet or as part of a computerized accounting package like QuickBooks. Every entry in the cash books should be referenced back to the relevant supporting document. There is this good story that somebody told me one time, which made me in this case here to think of a very important question. If, for example, here you are an accountant, you have got 2 files. One file has supporting documents, the receipts, etc., supporting documents. Another file has got financial statements over a number of years. And then from nowhere, we have fire erupting. Fire erupts. And then you are told that you can only be able to carry one file out. Which file would you want to go with? Which file would you want in this case here to rescue? The file that has got supporting documents or the file that has got financial statements? The source documents, because from the source documents, you'll be able to do what here to construct your financial statements anytime. Supporting documents are so wonderful. Like right now, we have a case that we are working on at KRA Tribunal, where somebody is being asked to pay KRA about 400 million Kenya shillings. This is just a normal reseller of mobile phones. The guy was importing phones. So this guy was not, in this case, ladies and gentlemen, remitting any VAT pay from workers, etc. So when we are there, of course, KRA is very much understanding. But there, KRA, if there's a body that I've ever come to respect nowadays, it's KRA. Those guys are not out there to destroy people's businesses. No. And you should never fear them. Because now KRA is telling you, fine, we are seeing that this is a common person. Maybe there could have been a problem here and there. Not a problem. Go and then construct what here. You want to construct financial statements for him. And of course, legally, try to see how you can minimize this tax liability, because what they've done there is to provide their own self-assessment. This gentleman does not have much of source documents. It's a disaster, right? And remember, you are required by KRA to maintain those source documents for a number of years. So you would rather financial statements here disappear, but always source documents must be there. Always source documents must be there. Great. Now, it is important to check the accuracy of the accounting books at the end of each month by carrying out 2 essential reconciliations. The bank statement balance is compared to the bank cash book closing balance. A physical cash count, for those of you who are running petty cash, it will be very important for you to do a physical cash count. Accounting works by assigning codes to each transaction entered into the cash book, right? Entered into the cash book, right? The unique list of accounting codes that an organization uses is called its chart of accounts. Another set of accounts, another set of codes can be used to assign transactions to a specific project or department. These are called cost center codes. We'll come through this, and by the way, for your information, perhaps you've never known this. You know, we normally teach you CPA, but you see at times what is out there is quite different. So in most cases, you will need a person who is very experienced, to mentor you as an accountant, and that is why you normally see myself calling myself there on Facebook, Joshua Aura Mentor, because I mentor accountants to become best in practice. So like now here, this free mentorship that I'm giving you, but the other mentorship class that I'll be giving out here is going to be very costly. So please listen to this very well. And I've seen somebody asking me to share my documents here with them. I'll not share until I get some payment. No, I'm joking. This one I'll be able to share with you on WhatsApp for free. Great. So now we come to the statements of best practice for basic accounting systems. 2.1, every payment made has a supporting document providing evidence. If you agree with this, if you normally do this in your company, say 5. If you don't have supporting documents, say 0. 2.2, all cash or checks received are recorded on pre-numbered carbon copy receipts. All cash or checks received are recorded on pre-numbered carbon copy receipts. If the organization does not receive cash or checks, score a 5. We normally recommend, ladies and gentlemen, under the balance scorecard and the processes, we are recommending nowadays cashless businesses. If you're a cashless business, that is very good of you, score a 5. But also, if you receive your cash, stroke checks, whenever you make your sales, but you record this, you give, in this case here, receipts, which are, of course, having carbon copies. If you do that for sure, put a 5 there. Number three, all payments and receipts are recorded in cash books. But we have a cash book. It doesn't matter whether it's a physical cash book or a computerized cash book, which must have a date at the minimum, description and amount. All payments and receipts are recorded in cash books, and your cash books at the bare minimum, even if it's Excel, there must be a column of date, description, and the amount. If you normally do that, if you have a very good cash book, please put a 5. If you don't have, please put a 0. There is a separate cash book for each bank and a cash account. You know, ladies and gentlemen, for each bank account that you have, for example, RCM, we have like 3 companies, 1 subsidiaries. One company has an account with Stanchart. We have a small investment company which has an account at Unitas, Sasako. We normally want that because of the financing aspect, etc. So each bank account must have what here? Its cash book. Are we together there? Are we together up to 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 there? Yes. So if that is the case, thank you very much, Opio. If that is the case, then please score a 5. If your company has got a cash book for each. Very good. Very good. 5. Every entry in the cash books is cross-referenced to a supporting document. Every entry in the cash book is cross-referenced to a supporting document. But we received this amount and the receipt number is this. If you have that, please put a 5. If you don't have that, put a 0. 6. All cash books are updated at least once a month. Remember, updating of cash books is supposed to be a daily thing, a real-time thing. But there are these small organizations that can't afford to have a full-time accountant. But an accountant in this case here pays them a visit once in a while. Remember, cash book reconciliation with bank statements has to be done on a monthly basis, at the bare minimum, on a monthly basis. And that is why we are saying that the updating of the cash book should be there at least once a month. If that happens, if you normally update your cash book like every day or at least once a month, put a 5. If you don't update your cash books at all within a given month, put a 0. If sometimes you do, 4 or 1. I know you guys are now used to this, 4 or 1. Great. So come to the next one, ladies and gentlemen. 7, all cash books are written neatly in permanent ink or on a computer. There is this particular company that I went to, and I found an accountant who was maintaining a cash book using a pencil. That is a thief. A cash book has to be written neatly in permanent ink, or in this case here, a computer, right? And even a computer, of course, there must be what here. It should be a very good system that has got audit trail. Otherwise, people will keep on changing things. So if you normally do that, score 5. If you don't do that, if you're using a rubber and a pencil all over, or if you have got nothing like cash books, say 0. 2.8, that a standard chart of accounts is used to code or classify each transaction in the cash books. Do we have chart of accounts? Do we have codes? If we do, please put a 5. If we don't, please put a 0. Ladies and gentlemen, it will also be very important for us to be able to know which department is chewing the most cost, chewing the most in terms of resources, in terms of costs, etc. That we have what we call, that's number 9, we have a departmentalization procedure, right? The transactions are also classified by class or department using a standard list of cost centers, right? So if you have cost centers, because at the end of the day, in terms of appraisal, we'd want to know which center has been knocking most of our profits down. And whether if it has been doing that, how much has it been generating in terms of profit? What return are we getting out of that heavy cost? So if you have cost centers in your company, put 5. If you don't, put 0. 2.10, a bank reconciliation is done each month for every bank account. For every bank account. For every bank account. So please, if you do those bank reconciliations for every bank account, put a 5. If you don't do, don't waste our time. Put a 0. Put a 0. 2.11, a cash count reconciliation is witnessed and recorded each month. For those of you who have got petty cash, remember the impromptu cash counts, right? So in this case here, we have a cash count reconciliation. So basically the petty cash reconciliation is very important. It has to be witnessed by a senior person and a record has to be there. If you normally do that, please put a 5. If you don't do that, please put a 0. Then the last one, 2.12, the organization keeps track of amounts owed to others. Like we have so many companies that even if they were to be called today to give a list of their suppliers, they don't know how much is owed to each staff. They don't know, right? The organization keeps tracks of amounts owed to others, and of course owed to us, like the debtors, etc. etc. Please, if you have that in place, put 5 or a 0 there. Could you kindly give us the total score for the basic accounting systems? Anne came in a bit late. Remember 4 and 1, we said if sometimes you agree with that, statement, but it doesn't happen always. It doesn't happen always. You can put a 4. If, for example, it happens but at a very low rate, but not 0, you put a 1. Peter Wangeshi 50. Great. Then you guys are good account. Bahati 49. Bash 65. Wow. Patricia 52, 59, Robert Doty. And please, I also want to imagine that you guys are writing down some action points, because I don't want us to have this class as a wasteful one. No, I would want action points. What shall I do when I get out of this tomorrow at my place? What am I going to advise my employer? Because employers have to be advised. Now we go to the third one. Financial reporting is very important. The board of directors need financial reports to oversee the finances of the organization. Managers need up-to-date figures to monitor department performance and make decisions. Increasingly, organizations are sharing financial information with various stakeholders to increase accountability and build confidence, especially if we are looking for funds. An annual external audit verifies the accuracy of the financial statements. The monthly financial report should include an income and expenditure report showing money coming into the organization and how it was spent. If the report compares the amount spent against the budget, it's called a budget monitoring report. That is very important. The budget is supposed to be a tool, not a straitjacket. Managers should use financial report to help make decisions so that money is used efficiently and effectively to achieve desired outcomes. It is also important to report on balances held at the end of each month or quarter. Balances includes the amount of money held, cash and bank, as well as amounts owed to organizations, such as unaccounted working advances, and owed by organizations such as suppliers, tax authorities. There should be a tracking of stock and fixed assets, the PPE, as well. This is all represented in a statement called a balance sheet, or a statement of what here? Financial position. Reports should be produced showing the relevant level of detail according to their use, e.g. for a single project or department, or consolidated. Reports should also have the right format for their use, e.g. board formats, standard formats for annual audited accounts, accessible formats for beneficiaries, user-friendly formats for managers. Now we go to the statement of best practices. Number 1, the board reviews financial reports every quarter. Remember, most boards sit on a quarterly basis. So if your board sits down on a quarterly basis and they're able to review their financial reports, you kindly score a 5. They put in a score of 5. If you know that your board is a lazy board, put a 0. Senior managers discuss financial reports at least once every 3 months. Senior managers must discuss. It doesn't matter whether they are in accounting department. Senior managers must sit down and discuss financial reports at least once every 3 months. 3, I'm moving fast because I know now you have gotten used to the system. 3, reports include details of cash and bank balances, amounts due and owed. You know, it's accrual basis, right? So put either 5 or a 0. 3.4, the people who are in charge of these budgetary items, the budget holders, receive budget monitoring reports every month. Please underscore the words every month. (3.5) Budget monitoring reports include explanations and comments about differences. If you have ever seen this budgetary monitoring report, it's more or less what looks like a variances report with a clear comments about differences, right? That we are not making our decisions haphazardly. 3.6, Financial reports are used to help make decisions. 3.7. Hope you guys are putting your scores now very fast as you want to finish, because I can see I've extended by more than 20 minutes, which is bad on me. 3.7, financial information is shared with beneficiaries, like shareholders. Remember, you're supposed to be a see-me-through company. Everybody has to see through the company, Financial information is shared with beneficiaries, stroke shareholders, at least once per year in an accessible way. Perhaps you're issuing your financial annual reports, right? 3.8, the last one, annual audits are up to date, signed within 6 months of the year end. Actually, nowadays we recommend 3 months. Annual audit reports are up to date. If yours are like that, put a 5 score. If they're not like that, put a 0 score and give me the total score. 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 I'm not seeing anybody who is giving me the total score there. I'm not seeing anybody who's giving me the total score there. I'm not seeing anybody giving me the total score there. 30, 28, 40. Wow, Pio, great. Longo Rock, David, 35. 35 from S. Peter Wangishi, 17. There's quite a lot, Peter Wangishi, you'll have to do. You must advise your employer so much. But I know what has knocked most of you down is this concept of what here, the budgetary monitoring tool. Most companies don't have it. If you don't have it, you'll end up getting even less than 10. 0335. Thank you very much. Devin Bogwa, 30. Thank you very much. Now we go to the second last, actually third last, but I'll be able to move through this very fast now. Very fast now. Now, internal controls. If you remember the concept of internal controls are those umbrellas that we are putting on top of the company to ensure that the company is not being rained on. Which kind of rain? Like the one that rained yesterday night? No, it is thieves who would want, in this case here, to bring in their bad water into a company. So these thieves, we need to find a way of putting them off the company so that they don't come in to a doctor to pour water, especially on the books of accounts. Because when they steal our assets, they normally come and destroy our books of accounts. Remember, internal controls are supposed to be protective membranes that we put there to ensure that we safeguard our assets. And then, of course, we safeguard our future so that in the long term, the company's objectives will be met. What are the key objectives of controls, internal controls? We normally use the acronym ASTOP, when the chini ASTOP. When we have internal controls, A, we should be able to get accurate financial statements. S, safeguard the company's assets. T, get reports on time. Like when you get people giving you audited reports, which are more than 9 months, I mean, there is nothing there, right? Order has to be there in the organization as top. And then P is prevention of fraud and what here? Error. Prevention of frauds and errors like that. So when we talk of internal controls, if you don't have internal controls there as a company, you are not going anywhere. You will not, in this case here, you not have your company going beyond the Kendu Bay. Kendu Bay will be your last region, your first and last region. But if you'd want to have a company that transcends Kendu Bay and even rises all the way to become an international icon like Safaricom with this M-Pesa thing, then you have to put in internal controls that are so strong that even you as the owner of the company cannot steal money from your company. Because we know of some owners who steal money from their company. We know there are many, they're even here. Organizations use a lot of different internal controls to make sure that assets are safeguarded, accounting records are accurate and up to date, fraud and errors are prevented and detected, staff are protected. Staff must be protected. I remember for so long we've been saying that customers are the king. No, roles have reversed. Nowadays, it is the employee who is the king. And the moment you treat these employees so nicely like kings, then they'll treat everyone else, including your customers, like queens. Not. The other sections of the health check also include important controls. For instance, cash and bank reconciliations are important for checking accuracy of accounting records and identifying fraud. So statements of best practice. Cash is kept safely in a locked cash box or safe in the custody of one individual. For those of you who are running petty cash systems in your offices, do you have a safe where you place that money under the keys to the safe? Do they belong, or rather, do we only have one individual who has got access? That's safe. If that is the case, put a 5. If that is not the case, there is a big weakness there, put a 0. 4.2, all cash received is banked intact immediately, i.e. without any being spent, like the owners, directors here, most of us are thieves, because some cash will come in, you are given 5,000, but you do what here, somebody you send for banking like 3. The 2, unaenda kama nikitengela 0.34 unakula pesa kambuni, wewe ni mjinga. Alafu mwalimu anakutana kidogo sababu mimi ni mentor. Because you don't understand the concept of a business entity principle. You and your business are two different things, two different entities. So if no cash is received, if you are a pure cashless system, please score a 5. We are the people we love. If every money like RCM publishers, RCM online college, we only accept money that comes to us through our bank account. We don't take cash at all. So here we give ourselves 5. 4.3, all checks are signed by at least 2 authorized signatories, especially for companies that have got many directors. It's important that you get, ladies and gentlemen, to have like 2 signatories to check on one another, on each other. Minimum 2, because whether you like it or not, human beings, all of us, whether we like it or not, we are greedy. We are very greedy, right? We have this kind of a hunger which cannot be satisfied. Today, if I have a Prado, I mean, I'll not take it to be a very serious car. I would still want a bigger one. So if I have got a situation where there is nobody who is checking me, that we have got like 5 directors, but I'm the only director, then there is a big internal control weakness. So please score a 5 there if you have got more than 2, or rather 2 or more. Score a 5 there. Score a 5 there, right? 4.4, checks are signed only when all the details have been properly filled, i.e. no signatories ever sign blank checks. At times when I'm with my friends, I don't even tell them off outrightly. At times I'm with my friends, many times. You get in this case here an accountant of an organization just flashing a check to where this person is eating some food in some restaurant, asking this guy to, there are no supporting documents, he simply signs, right? So if you are aware that there is this statement of best practice which happens in your company, whereby all checks are signed only when all the details have been properly filled, please put a 5 there, otherwise put a 0. 4.5, bank reconciliations are checked by someone who did not prepare them. It's called segregation. Somebody different, senior accountant, should be able to check these bank reconciliations and append a signature of having checked there. If normally that happens, put a 5. If the accountant is the only one we have preparing the bank's reconciliations, and then the same accountant is the one who is checking, how do you even get to say your own errors? We go to the next 4.6. There is a written policy detailing who can authorize expenditure of different types or value, that we have what we call authority to incur expenditure. If we have those authorities of who is going to incur expenditure and approve, please put a 5, otherwise put a 0. 4.7, all transactions are properly authorized. If that is the case, put a 5, otherwise put a 0. 4.8, cash payments are authorized by someone other than the cashier. The one who holds this cash should never be the one who is authorizing. No, you should receive instructions. So then, gentlemen, if that is the case, that's a statement of best practice, put a 5. Otherwise, put a 0. 4.9, different steps in the procurement process, ordering, receiving, and paying are shared among different people. You cannot be the one who is ordering. You receive these goods and then you pay for them. That means you'll end up taking these goods home with you. The person who is ordering should be different. The person receiving these goods in the warehouse should be different. The person paying for these goods here should be different, so that these guys here cannot come and collude to steal from the company. It becomes hard when you spread tasks between different people and ensure that there are many ladies there. I'm joking. So if that is the case, put a 5, otherwise put a 0. 4.10, expenses claims for staff advances are checked by the same person who authorized the advance. The person who authorizes the advance should be the one who is automatically again going to check those items when they are expensed. The expenses claims for staff advances, those claims should be checked by the same person who normally authorizes the advances. Otherwise, you'll be cheated to sign some of these things in a club, and at the end of the day, you'll get into problems. So if that happens, then put a 5, otherwise put a 0. Staff salaries, including advances and loans deductions, are checked each month by a senior manager. A 5 or a 0, very important, 5 or a 0. Statutory deductions, e.g. payroll taxes, are properly made and paid on time. If that is the case, please put a 5, otherwise put a 0. 4.13, we are almost finishing. 4.13, that all property, plant, and or rather fixed assets, e.g. vehicles, computers, equipment owned by the organization are insured, and comprehensively, by the way. Comprehensive insurance, and controlled using a fixed assets register. So if that is the case, could you kindly put a 5 there for yourself? If you don't have insurance for your assets, you don't have a PPE register, please put a 0. 4.14, there is an approved policies and a procedures manual in place which is relevant to the organization and known by staff. An approved policies and procedures manual. If you have it, put a 5. If you don't have it, you're not doing so well, please put a 0. Lastly, 4.15, a properly registered audit firm is selected by the directors. A properly registered audit firm is selected by the directors. If we have that, put a 5. If we don't have that, put a 0. And give me the total score. Somebody give me the total score. Give me the total score. For those of you who are doing accounting, of course, you'll be able to see the importance of this. For those of you who are in business, you'll also be able to see the importance of this in your own businesses. Give me a total. Give me a total there very fast. Give me a total. 75, 75. There's a working for serious companies. 70. Wow. 75 means for the 15 best practices, they have scored 5 in each of them. In each of them. Please, if you're getting a 0, don't be afraid. Just give us 0 there. Want to advise you properly. 69. I've never lacked less than 10 in this. This will be the first time I'm lacking a figure that is less than 10. Meaning that there are people here who are not honest. Thank you very much. There are people who are not very honest today, I can see. For 4, there are many companies, even the big companies, right? We get some of them in this case here not getting 75, right? So the list is 46, I doubt. We'll come back to it. The list is 46, I doubt. We'll come back to that. Great. Now from there, we go to this working capital management, which talks about cash is the king. I've seen very big companies going down because they never took serious consideration of their cash flow status. So careful cash flow management allows a business to estimate the amount of cash that it will have at hand at any one time, project trends in cash inflow and cash outflow, and evaluate whether a shortfall or surplus in cash could potentially occur. Cash is to a business as fuel is to a car. Hii kitu naibishanga mtu, hii kitu ya mafuta kwa gari. Kwanza ukiwa na gari kubwa na ucheze, unafika kama ni Thika Road, ilikuonyesha kitambo taa imewaka red empty. Wewe ukaanza kujikonsole kwamba inakupeanga kama 20-40 kilometers. Inafika mahali kwa mlima, inakwama. Huwezi songa. Na ikiwa kubwa hiyo siku huwezi sukuma, unapata shida mingi sana. Kakibuyu mzee unakimbia all over, right? Life saver zingine hata unapata shida. So the same case with cash. If you don't have cash, ladies and gentlemen, in the business, trust you me, you will fall into what we call thin capital. Thin capital is a killer of business. Your suppliers will lose trust with you. You have to regularly monitor your fuel gauge. It's a dashboard. It's a dashboard. Try ignoring your fuel gauge and see how far or for how long you'll be able to drive. Practically speaking, one doesn't clearly open the fuel tank to check the fuel levels. Similarly, there are tools one can have in place in a business to help monitor the cash flows. A cash flow forecast can be maintained in a simple spreadsheet. Many accounting softwares, such as QuickBooks, are very user-friendly and have inbuilt financial dashboards that allows you to monitor your business performance and the position very much the same way you monitor your car dashboard. Ladies and gentlemen, it's important for you to ensure that you are a liquid. You are a liquid all the time as an organization. And that is why we always recommend about 5% of the revenues you get. Please always try to have about 5% of the revenues you get going to the treasury bills. Because treasury bills are very liquid, right? They may not be able to give you very high returns, but remember, you have to think like a capital assets portfolio manager. Somebody in terms of portfolio management, if you remember CAPM, capital assets pricing model, CAPM, capital assets pricing model, a good investor will always mix between risk-free and what risky investments, market investments. So as much as you may have some assets out there that are what somebody that are not something in this case here, which is risky, but having high returns, at times things can go haywire. So we would need a situation where, ladies and gentlemen, you are liquid. If you're not liquid, then automatically at the end of the day, we shall be able to get into problems. I can see Monica, my longtime friend, and I said, I need a sitting with you. Something not right somewhere. We haven't reached there, Monica. We shall reach there. We shall reach there. We shall reach there. You'll be surprised, perhaps your company is among those ones which are doing very, don't panic. Don't panic, please. Don't panic, please. Great. So we continue here very fast. And these ones I'll run through them. So like we have here, there is a system of tracking and following up debtors and ensuring collections are made in a timely manner. Because if your debtors don't pay you in time, you'll get yourself in cash flow problems. Put a 5 there, otherwise put a 0. A 5 or a 0. 5.2, there is a system of tracking and following up creditors and ensuring the suppliers are paid as per agreed terms of payment. Remember, when you're doing cash flow management, you look at the debtors, you look at what year, the creditors, and ensure that debtors are able to pay you faster than you pay the creditors. Yeah, your debtors, you give them like 30 days, but ask your creditors to give you 60 days period. But if you ask for 60 days and they give you no problem, ensure that you pay them as per the agreed terms. 5.3, the financial reports are adjusted for prepayment, accruals, and any deferred income. Any deferred income. So like in my place here, there's a time I used to get income statement here for each month. So you get somebody comes and gives you an income statement for the month of, for example, March, right? And they tell you that in March, for example, you made an income of 600,000 as a company. When you look around, end of March is when we pay like our second quarter rent of 3 months. And then this gentleman has taken this 3 months rent, akaeka yote in 1 month. No. No, first of all, the entire figure should not belong even in this quarter, should not belong in this month, because it's just a prepayment for the next, right? So I need really to do the matching very well. So if you normally do that, please put a 5. If you don't do that, please put a 4, or rather a 0, right? There is a control account. Control accounts, they're quite important accounts in any business. There's a control account for tracking payroll obligations, staff salary advances, and staff loan payments. If you have that, put a 5. If you don't have that, put a 0. 5.5, there is a system in place for tracking stock. Stocks mess up our liquidity. So you must have a very good system for tracking our stocks. So there is a system in place for tracking stock and ensuring optimum stock is maintained at all times. If that is the case, please put a 5. If you don't have a stock management system, please put a 0. 5.6, there is a system in place for managing and or investing surplus cash. You should never have surplus cash. Never, ever. You should never have a surplus cash. So if you have that system of investing some surplus cash, if you put a 5, if nothing, put a 0. 5.7, funds are kept for activities they are meant for and they never borrowed for other activities. I've seen these messing up so many companies. It is only in government. I know government accounting at times is very good. If they call them vote heads, they call them vote heads. They call them vote heads. They call them vote heads. So you should never, in this case here, borrow cash from other activities to fund other activities. No. So we have 5 versus what here, 0. Or rather, if you have to borrow, if you've got to do an exchange like that, there must be a very compelling, very good reason. So could you kindly give me the total score, and then we see how we are basically managing a working balance. A working balance. Please give me the total score. Give me the total score. Bash says 35. Robert says 35. So in terms of working capital, then you guys have got no issues. What has impressed me is that you know how to collect money from your debtors, and you know also how to delay your creditors in terms of bargaining power. If you go to some of these big companies, you'll be surprised, like Safaricom, when you are their supplier, those guys will even squeeze 90 days from you. It's like you're giving them soft loan. But these small farms, they want to buy everything on cash because they don't understand the language of what you're working capital. You brought something in today, you pay immediately. That's wrong. You're supposed to use these suppliers' money to do business, But remember again, it has to be in a controlled way. When you say you ask for 90 days, ensure that you pay within those 90 days. Otherwise, you'll be seen to be a con man and you'll get into problems. So we go now to the last one. Let's go to the last one. So the last one, staffing. The last one is staffing. I told you should take care of your staff very well. Good financial management is dependent on staff with the right skills, support, and attitude to carry out their responsibilities. All staff have a role to play in financial management. The accounting staff are part of a wider team, including the managing director, managers, and the board. Integrated good financial management into programs involves budget holders and finance staff working hand in hand through all the stages of the financial cycle. Plan, do, review. It may be difficult to assess the technical competence of accounting staff. Good indicators are the timelines of reports, the neatness of files, and records in the accounts office, and auditors' comments or recommendations. So this one, we are just brushing them through very fast. The board includes someone with skills needed to oversee all financial activities. In your board of management, you are, for example, a member of ISPAC. If you do, please put a 5. If you don't, like you have a board of all medical doctors, that's wrong. The board includes someone with skills needed to oversee all financial activities. Very important. 540. The finance staff have the skills and the qualifications needed to carry out all financial activities. The finance staff, you don't have to be all of you, but you have some of you having a ISPAC designation. People are in good standing with ISPAC, who attend ISPAC meetings. 3, managers and program staff have the financial skills they need to manage budgets and implement controls. Do you have, in this case here, a person who is so good in implementing controls and, of course, managing budgets? If you do, put there 5. If you don't, put 0. 6.4. Finance staff and the budget holders work together well in payments, processing, and the budget monitoring. I'm repeating 6.4. Finance staff and the budget holders. They work together well in everything. In payment processing and in budget monitoring. Like in Kenya here, you can't pay. For government, you can't pay without, in this case here, the budget officers putting a signature. There must be that coordination between this finance staff and the budget holders. If that is the case, put a 5, otherwise put a 0. 6.5, different roles within the finance function are clearly defined, known, and followed. So the different roles in the finance function, payables, receivables section, they are very well defined, known, and done what you followed. So either you put a 5 or a 0 there. 6.6, senior staff lead by example in following control procedures. Senior staff lead by example in following control procedures. So as usually, I would want you guys to put on your cameras. Today, please put on your cameras. I would like to see your faces. Like I'm able to see titles. Please put on your cameras, put on your cameras. Try putting on your cameras. I would want to do some exercise here. Yeah, just a small exercise. Yeah. Please put on your, most of you are not putting on cameras. Thank you very much, Jackson. Yes, I'm able to see you very well. Thank you very much. I saw Catherine or somebody. Put on your, it doesn't matter. Iko mwana niambia tojo mwalimu, ikiwa home niko na sleeping dress. I'm not seeing you guys. I'm not seeing you guys. I can't see Renis. I'm not seeing you guys. I'm not seeing you guys. Mmekataa kuweka cameras on kwa nini? Mmekataa kuweka cameras on kwa nini? Now, I would want you to do me a favor as usual. Please, with your hand, form this kind of a round circle. Form this kind of a round circle with your hand like that. Have you done that? And then please place this circle of yours on your chin. Place it on your chin. Place David, I can't see you doing it. David Mbogwa, I can't see you doing it. Thank you very much. Now I've seen you doing it. Yes, Dorothy, thank you very much. Akipnyemoy, thank you very much. Thank you very much, accountants. But honestly, is your chin here or here? Is your chin here or here? Sio mbaya, but you see, why did you place your hand here as if this is your, it's because this is what Mwalimu as your leader did. So do you have some type of directors here who keep on telling people do this, but they do right the opposite of it? You tell, for example, employees following the leader. Following the leader, that is the concept. Following the leader, that is the concept. Following the leader, that is the concept. So what type of leaders do you have? So if you have very good leaders who are able to lead you by example, put a 5. If they're just stupid leaders who tell you A and then they do B, put a 0. Finance staff are recruited freely, hakuna kimenyano, and fairly on the basis of merit only. So you look at yourself, how you got in that organization. If it was through pure interview, never gave anybody anything. This Kenya, of course, I don't feel bad. But if you went in a corrupt way, put a 0. If you went there in a very good way, merit, put a 5 there. All staff receiving the training and the support they need to carry out their financial management responsibilities. All staff receive the training and the support they need. Like there are some companies which normally call some of us, like have many companies like breweries have done some trainings there. The other week I was doing trainings at, is it Platinum? Yes. Like last week I did IFRS training for the AAR staff. AAR staff, I was training them specifically on IFRS what year? IFRS 17. Yes, professional development for staff, yes. So ladies and gentlemen, if you have a company that is able to support you that way, please put a 5 or a 0. Otherwise, put a 0. Please give me the total score for that. Give me the total score for this section. Give me the total score for this last section. What do we have there? 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 Put the last score for the last section. What do we have there? So Bash says 35. Michael, thank you very much for being very honest. 14. 033. Be very honest. I like a lot of honesty. If it's very high, tell us it's high. Felicitas 26. Peter Wangeshi 30. Thank you very much. Peter has been very consistent in this class. Thank you very much. Longorok David, my student 20. Thank you. Because they are over 80, they're over 80. David Mboga, thank you very much. 25. Patricia 25. Thank you very much. Thank you very much. Thank you very much. Titus of Pio 30. Titus, this one is not doing very well, right? Danson Jao 21. Thank you very much. Damaris 30. Now, I want you to do me a favor. I want us to go to the summary section. Let's go to the summary section. Let's go to the summary section. In the summary, record your score for each section in this table. Please draw this kind of a table. Draw this kind of a table, and then put planning and budgeting section. What was your total score? Basic accounting system. What was your total score? Financial reporting system. Put this, and then you give me the total score for your summary. Is there somebody who is able to get the total score for us? Anybody who is able to get the total score for us? These are very serious session, by the way, which I should consider giving you a certificate. If you have been able to attend this session from the beginning to the end, I'm so sure you are going to become a turnaround accountant. It's something that I should be able to give you a certificate if you attended from the beginning to the end. And please be very proud of that certificate, because I am so sure from this exercise, you're going to become a turnaround accountant. You're going to turn around organizations. The only thing we need to do is to discuss between ourselves, what name, what title do we give to that certificate? You come up with a very good title. And then, of course, most of you, I appear in most of your CVs, right? So you go up there and then you say you have been attending Joshua mentorship classes. You say you're a turnaround accountant, you know this kind of a thing, financial health check. You'll become a hot cake. So is there someone who has been able to give me the total score for all the 6 sections? Total score for all the 6 sections? Total score, 219, 277, Robert Doty. It's a serious organization. Patricia 222. Wow. 187. Wow. Please don't fear giving us. It doesn't matter what score you get. We are here to improve things. We are turnaround accountants. Don't cheat us. Tell us the truth. Opio 275. Lawrence 166. Thank you very much. Jackson Nganga 190. Please give me the scores you are getting. Remember, it's not your problem. At times, it is your director's problems. You tell them, give me bank statements. They don't want to give you bank statements. Roderick have just joined very late, or because of the time differences here, Malawi. Malawi, Roderick, we shall overcome. Titus 2:01. Problem now, Roderick, the next class I will charge you. Well, I can't give you all this. I can't give you all this stuff for free, really. You guys must be very lucky, right? Yes, I will assist you with documents, yes. I'll assist you with documents, yes. I'll send them on WhatsApp. I'll send them on WhatsApp. I'm waiting for your total scores from the 6 sections. From the 6 sections. The certificates will only be obtained by students who came in at the beginning to the very end, who have been with me here for the 1.5 hours, Fortunately, Zoom has got a way of telling us exactly that. Oh, they should also be pegged on participation of the students, yes. I'll be able to track and see the responses. If you never responded at all in any section, then you need now to attend my next class, of which you'll pay for me to give you a certificate. Because I told you from the beginning, this is a participative class. You chose not to answer anything. You chose not to give us any answer. How do I give you a certificate? I'll not be proud of you, right? 225, 196. I'm still, you know, there are 79 students. 79 students. The students are not giving us answers. Bash says 175. And also, don't give me answers privately. No. Make sure that your answers are going to everybody. Make sure that your answers are going to every. Calvin, my student, 164. 164. And Calvin, today I don't have your classmates here. How did you not tell your classmates that you're going into a very serious discussion? You ought to have told your classmates. You owe them a duty of care. Andrew Muriai, 150 a bit. Rang 150 low. Long Rock, 200. Nor is asking if you are still a student and don't have an organization. How do you rate? Why don't you ask us to give you internship? No. Why do you want to study all the way to the last section without getting experience? We don't want that. CPA, even after you do CPA 1, you are eligible to get an internship. You're even eligible to get into some work because you can do bank reconciliations, etc. Even section 1 alone. Rent is 200. Thank you very much. So in conclusion, ladies and gentlemen, this is what we have. If your score is over 240, well done. Your financial management is in good shape. The risk of not being able to complete your work being because of financial problems are low. But do also consider the risk assessment in each section. Remember, I've given you the marks here. I've given you the marks for each risk section. Effective financial management requires strength in all the 6 areas. Use this opportunity to make improvements and further reduce your financial risk. Further reduce your financial risk. How many of us have companies scoring over 240? How many of us had our companies having over 240? Remember Opio? Opio. I remember Opio. I remember Opio. I remember Opio gave us 275 or something. Somebody who gave us 275. There is somebody who gave us 275. There is somebody who gave us 275. There is somebody who gave us 275. Now they're not talking. Now they're not talking. There is somebody who gave us 275. Yes, it's Titus who gave us 275. So your firm must be doing very well. So if you don't mind, Titus, later on, please disclose the name of your company and don't do direct message. Please disclose the name of your company so that very soon we should be able to recognize the organization is a good organization. It doesn't have to be very big, but at least you guys are following rules and regulations. You will be starting attachment next week. Also, Robert Doty 277. 277. Thank you very much. Thank you very much. Those are good organizations. Would want to know their names. Would want to know their names and possibly recognize the accountants who are there. They're doing a good job. Your score is between 151 and 240. Not bad. Not bad. There is clearly some good financial practice in place, but still plenty of room for improvement. There is a risk that financial problems will prevent you from doing your work. Low scoring sections require immediate attention from managers. Is your score less than 150? There is quite a lot to be done. Of course, you're not at zero, I want to believe. There is quite a lot to be done. You have serious problems. Your financial management is not good, in good health. There is a high risk that you will face financial problems in the very near future. Funds may be misused, or shareholders may withdraw their financial support. Managers and directors should meet urgently to discuss how the situation can be improved. You should consider calling in assistance as soon as possible, and as your mwalimu, I'll gladly come in your company to give you this support for free. If there is any support you would want me to help you, for example, help you to craft like internal controls, etc., mentor your accountants, those are things that I'll be able to do very well. And ladies and gentlemen, now we have come to the end of this particular session, not unless there is anything to really discuss, like before we end. How was the session? Do you think this session was helpful? Has it been an eye-opener? This session, has it been an eye-opener? Yeah. Great. So how I wish it's only that, I don't know, I've got so much really to give to my students, but unfortunately, or in our organization, it has taught me quite a lot. Great. I was totally blind. Very good. It's good to be honest. As a young accountant, yes, I love it. Mwalimu, you are the best. Now I feel like a shuja. Session rating 90 from where I joined. Kazi Safi, thank you very much. You are our Baba. So there is quite a lot that I think I can give to these young accountants who are coming up as a CSR. So I don't know whether we could create like, even if it's 30 minutes, fortnightly, where we come and, for example, address, like so many students are using QuickBooks. At what I should have done, sorry, is to mute this recording. In the registry that we have utilized. One and sometimes 3 months. We're taking an official lifestyle. The army that the system will give you a lifestyle in 3 to 5 minutes. And now, with digitization, we have a platform to ensure that every inch of care is not. And one area the individual and that's my belief that after digitization, issues of land titling will be sorted out once and for all. And I say so, because my administration has already issued 5.3 million titles under the annual registry in order to get. That is equivalent to the number of titles issued by the foreign land and the first 3 administrations combined in a total of 125 years. That if we achieve 5.3 million titles in 8 years under an archaic system, how much more we will need to achieve once the national system is completely digitized. Added to this,
We have taken the independence their regime of peace and affordable shelter and use policy instruments and insisted to make it unmanageable. One such intervention is that anyone registered as a pensioner can go up to 40% of their pension and use it to get a housing mortgage. Additionally, we have exempted first-time mortgage holders from paying of stamp duty, and in addition to a regular incentive for developers in build units under the affordable housing program. Further, and on digitizing our economy, in April 2013, during my 5 years as president, were cash being presenting a higher and a clean of the system. In one case, 60% of revenue was spent on making collections. By launching the e-citizen platform in August of 2014, 350 government services are now migrated to the e-citizen platform. And in the 7 years since the inception, the e-citizen has served a total of 27.2 million unique customers and collected over 10.1 billion in revenue. So Kenyans, our forefathers fought for a just and fair nation. So, we want to truly realize that we have every single service delivered through transparency and accountability. Therefore, digitalization is in order to facilitate action. I tell you at the end of the time, notwithstanding how important has been sure, most of these things, under the code of restrictions, I will when I feel civic responsibility, innovation, and resilience, none of it would have been made possible. From very early in the COVID crisis, I appeal to you to be your brother keeper and to exercise restraint as we navigate through this unfamiliar enemy. And all of you, each and every Kenyan, make us proud. I hear. Our forefathers who lived in the the remnant of Islam, and we continuously build the capacity of our citizens. Be related directly to the economic opportunity. The Europeans to address in the transition from primary to secondary. Ladies and gentlemen, as we continue to build life better, we are witnessing recovery in the economy. This rebound being attested by all leading economic indicators. We are poised for a stronger economic recovery beginning in the first quarter. This rebound is a result of the gradual reopening of our economy, especially the service sector, coupled with stronger global demand. This recovery is reflected, as I said earlier, in the strong revenue performance for the quarter ending September 2021, which saw our ordinary revenue increase by 25.8%. and amounted to Kenya shilling 441.8 billion, amounting to a production of Kenya shilling 17 billion above the target that had been set. In fact, second stimulus packages were designed by the government to ensure that our economy would endure the shocks occasioned by the lockdown measures implemented in the early stages of the COVID-19 pandemic. With significant progress in the containment of COVID-19, I believe it is now time to shift our focus from survival to coexisting with the disease. And in that regard, my administration will be rolling out the first financial stimulus program designed to accelerate the pace of our economic growth and to sustain the gains that we have already made. I announce therefore that effective the 1st of November 2021, new stimulus program targeting the key productive and service sectors in 13 strategic interventions that cover agriculture, health, education, drought response, policy, infrastructure, financial inclusion, energy, and environmental conservation. The first intervention is the key subsector. To safeguard the gains made by the key subsector, the National Treasury will allocate 1 billion shillings to support the fertilizer subsidy for our small-scale tea farmers. The second intervention is in the sugar subsector. To safeguard the livelihoods of farmers in our nation's sugar belt, I direct the National Treasury to allocate an additional 1.5 billion shillings in aid of the sugar sector that will be appropriated towards factory maintenance and maintenance of farmer arrears. The third intervention is the coffee subsector. In acknowledgement of the pace of the ongoing reforms in the subsector, the National Treasury to allocate 1 billion shillings to the Ministry of Agriculture to be appropriated towards the completion of the ongoing interventions in the coffee subsector. The fourth intervention is the livestock sector. Noting the effects of the ongoing drought situation, the National Treasury to allocate 1.5 billion to support the communities affected by the ongoing drought, especially in our counties, as part of our national livestock offtake program. The second also applies to the livestock sector, and in order to secure a reduction in the prices of animal feed, I direct the Cabinet Secretary for Agriculture, jointly with the National Treasury, to issue within 7 days a framework that will facilitate the reduction of the cost of animal and chicken feed. The sixth intervention is in education, and noting the success of our administration's policy of 100% transition from primary to secondary education, initially 8 billion to the Ministry of Education for the CBC Infrastructure Expansion Program. The seventh intervention is in health. Oh, so you are going to go to the coverage across the nation, and as part of our universal health coverage program, the Ministry of Health will move with speed to establish an additional 50 new level 3 hospitals situated in non-covered areas and densely populated areas across our nation. I heard that the National Treasury allocated some of frequent for the immediate construction of these facilities, again using local contractors so that the effect is also felt on the ground. The eighth intervention is the National Sanitation Program. We started this program to harness the energy of our young people and to give them a buffer against COVID-related unemployment. Noting the success of Kaizen Tani program and its effect in enhancing opportunities for youth across the country, we direct the National Treasury to allocate Kenya shillings 10 billion for the third phase of Kaizen Tani to be rolled out in all counties, with priority being given to densely populated areas. The above measures these new initiatives complement ongoing state interventions and are expected to sustain the momentum of recovery within the year's growth rate projected to be at 6%. The ninth intervention is on energy and petroleum. Being fully aware of the positive strides being made in our economic recovery, the gain stands the risk of being eroded by high energy prices. And to address the plight of our people, I do direct that the Ministry of Petroleum and Mining, jointly with the National Treasury, to develop by the 24th of December a framework for stabilization of petroleum prices so as to cushion Kenyans against the turbulence caused by the current volatility in fuel prices. And like me, the Ministry of Energy shall secure the full implementation of the report of the Presidential Task Force on review of power purchase agreements that establishes a pathway for the reduction of electricity prices by 20% by or before the 24th of December this year. I look forward to Kenyans being relieved of the burden of high tariff by Christmas Day. The 10th intervention is in the banking sector. The transformation of our economy and the emergence of our nation as a financial hub is as a result of the efficiency secured by technology. The gains we have made in digitization of our financial processes and transactions have made it possible for us to better track and trace the illicit flows of money. In view of these, we remain committed to the anti-money laundering and the combating of financing of terrorism CFT framework stipulated by the Proceeds of Crime and Anti-Money Laundering Act for Congress. These include the requirement of financial institutions to report cash transactions above $10,000. However, it should also be recognized that the implementation of the framework by banks has been onerous for micro, small, and medium enterprises, and cash still remains an important payment channel for MSMEs, representing 80% of all their financial transactions. Therefore, accordingly, the implementation of the cash transaction requirement by banks has not been facilitated on the operations of MSMEs, and to some extent has inhibited their growth. And in this regard, I further order the National Treasury, after consultation with other stakeholders, to immediately cause the upward revision of the cash transaction reporting threshold from the current mark of 1 million shillings, applicable to both withdrawals and deposits by customers. The financial institutions, however, will retain their reporting obligation to the Financial Reporting Center. The 11th intervention is access to credit. Over the last decade, we have developed a robust credit information sharing mechanism for the banking sector, which enables Kenyans to develop a credit history to enable them access to cheaper credit. This is an important pillar for pricing of loans. The COVID-19 pandemic, however, has adversely impacted businesses, particularly MSMEs, and as one of the COVID-19 emergency measures, we did previously suspend the listing with credit reference bureaus of borrowers whose loans were non-performing at the beginning of the pandemic. This suspension lasted for 6 months, from April to September of 2020, and provided relief, particularly to medium, small, and micro enterprises during the pandemic period. However, some of the MSMEs continue to struggle to get back to a sound footing following the adverse effects of the pandemic. So in that regard, and to further augment the interventions that we are making to give micro, small, and medium enterprises reprieve, I further order the National Treasury, in consultation with stakeholders, to secure the following additional measures to provide further space for recovery of micro, small, and medium enterprises. That the relevant authorities will, for loans less than 5 million, effect a moratorium of listings in CRBs for a period of 12 months to the end of September 2022. And further, borrowers with loans below 5 million and below, listed on the CRB from October 2020 to date, will not have that listing incorporated in their credit reports for the next 12 months ending September 2022. It is an ongoing measure and to accelerate our economic recovery.
Magis tenung CRB di baat kinya. Between kaya yani chito na active ngele kulon jeje chito nikibe last year akoi kakila akoi oyenye yakibe kinini akoi 2022 November ko magiliste ning CRB yani muitisom aja aya ko kinyoru specifically what I get yani jadi je artinya ini CRB